Test one, two, three. All right, there we go. Okay, I don't know what happened here, but it looked like my audio was broken for a bit. So I apologize, guys. All right, I am sorry. We're off to a bad start today. Hopefully we can recapture this stream, all right, and bring it back on track. I apologize again. I didn't notice that my audio was kind of not working at first, so we should be good. All right. So we got a lot to cover in this stream. We're going to be talking a little bit about what happened what happened today. You know, we had this famous Truth Social post that just came out. Richard, can you let me see? Can you hear me now? Okay, excellent. All right, excellent. Okay, so we're going to be covering a ton of stuff. We're going to be covering not only this very famous Truth Social post that just came out. We'll be talking about China-U.S. relations. How that impacts investing and especially the semiconductor space. We'll be talking about a little bit about inflation, Palantir's in the news, and Taiwan Semiconductor. All right, so we got kind of a little action-packed stream. All right, so. Let's just get right into it, guys. And you guys already know that I appreciate you joining me on this Friday evening. So this is the portfolio update. I will do a deeper dive at the end of the stream for those of you who are interested, okay? Right now, of course, this is not true. This doesn't even match what I actually made for the month because I made around $5,900. I do have a video coming out here at the end of this stream when I'll release it. So for the portfolio, again, these numbers don't seem to update. I don't know what's going on with the dividend tracker, but it doesn't seem to want to update. But today we had a decent pullback and then a rise and then kind of ended flat for the day. So, we ended in the red. Portfolio is kind of just doing what the portfolio does, but I will cover all of this towards the end of the stream. All right, so let's get into our first bit of news, and good evening to everyone who's joining the stream. All right, let's get into the first bit of news. And this is coming from Jamie Dimon. All right, so Jamie Dimon attended this economic forum, and he had some really good things to say. So I just wanted to share this with everybody because it's important to understand from a very large institutional perspective. Someone like Jamie Dimon, he runs obviously JP Morgan Chase. Hearing what he has to say, a lot of the times it's doom and gloom. Like But when you look at it from his lens, I mean, he manages trillions or billions of dollars, right? Lots of customer money. JP Morgan Chase is involved in a lot of just money. So, it's always important just to hear it from him and kind of see this from a risk management perspective. So let's take a listen.
Privilege to be sitting down with you, Jamie. There's a lot to get to in this conversation. So I figured we'd start small, and then I would ask you a really basic, straightforward question, and that is, what's your biggest worry right now?
Yeah. So first of all, thrilled to be here. I'm glad you're doing this. I hope we may join the defense forum you guys do every year too. And look, the way I look at it, the big picture is the tectonic plates are shifting. We got to get our heads wrapped around that. Those tectonic plates are the geopolitics with these terrible wars, terrible proxy terrorist activity around the world, North Korea, the potential proliferation of nuclear weapons over time, which is the greatest threat to mankind. And then you have the other tectonic shift is the global economy. So the global military umbrella of America, and then the global economy, of which trade is a part. The other parts are do people want to partner with you? Do you have your alliances? Do you have investment agreements? And all those various things, and they're changing. And then our debt, which you just heard a bunch of folks talk about eloquently, it's large, and it's not just us. We added $10 trillion in 5 years. We have, you had Reagan up.
And we're about to add a bunch more with this new spending bill. I think the number is around $3 trillion. So that's nice. That's always good.
They're talking about deficits. The debt to GDP was 35%, and the deficit was 3.5%. Today, it's 100% debt to GDP net, and a deficit of almost 7%, highest peacetime ever. And when the CBO does their numbers, which I don't really trust, by the way, they should do the stress test. Like, what happens if we go into a recession? That 7% will be 10%. And so we have problems, and we got to deal with them. And then the biggest one, underlying both that, is the enemy within. I'm not as worried about China. China is a potential adversary. They're doing a lot of things well. They have a lot of problems. What I really worry about is us. Can we get our own act together, our own values, our own capability, our own management? What you heard today on stage was the amount of mismanagement is extraordinary. By state, by city, for pensions, and that stuff is going to kill us. And, I always get asked this question, are we going to be the reserve currency? And no. If we are not the preeminent military and the preeminent economy in 40 years, we will not be the reserve currency.
All right. So again, on this channel, especially on the streams, I mostly cover this stuff on the streams, but the U.S. right now is posturing to maintain its hegemony in the world, its superpower status, right? This is what the whole tariff thing, the trade agreements really is about, right? This is about maintaining the U.S. dominance in the world. This is why we made all those deals with artificial intelligence. This is why we're basically cornering the market for the semiconductor sector. We're doing everything we can to make sure that the United States maintains its edge in the world, on the global stage. China is the biggest rival. Again, they still have plans to invade Taiwan and take out basically that whole country and bring it back into China, right? And this was the whole point about moving TSMC or Taiwan Semiconductor, moving it manufacturing into the United States in case something like that happens, right? In case something like that happens. But you also have NVIDIA that built an office in China, and they have an office in Taiwan as well. So, there's a lot of interesting things happening. And again, we usually cover this on the stream. I try to keep out, more of the global conflict stuff out of the way and the politics out of the way. But, again, sometimes finance and politics, they intersect. But what we can do is look at it from a macro point of view so it can help us in our investment theses and our investment decisions, all right?
That's a fact. Just read history. Now, I think we will be. Warren Buffett here would tell you we're enormously resilient. I agree with that. I think this time is different. This time we have to get our act together, and we have to do it very quickly.
That was a big answer. There's a lot to dig in.
So again, I like to listen to Jamie Dimon. I am a fan of Jamie Dimon. He's very pro-American, very pro business. I just like the way he thinks. So I always like to listen in whenever he speaks, especially at these big events. All right. So moving on, we actually had some really funny news today. Okay, and I'm going to go to the community. So I posted this in the chat. All right. This came from Truth Social. This sent the markets tumbling down. Okay. U.S. president posted on Truth Social 2 weeks ago, China was in grave economic danger. The very high tariffs I set made it virtually impossible for China to trade in the United States marketplace, which is by far #1 in the world. All right, we went in effect cold turkey with China, and it was devastating for them. And it was kind of scary if you looked at how many ships were sitting in the harbor, waiting to move over to the West Coast to drop their cargo off. It was kind of wild. Many factories closed, and there was, to put it mildly, civil unrest. I saw what was happening and didn't like it for them and not for us. So I made a fast deal, right, with China in order to save them from what I thought was going to be a very bad situation. And I didn't want to see that happen. Because of this deal, everything quickly stabilized and China got back to business as usual. Everybody was happy. That is good news. All right. The bad news is that China, perhaps not surprisingly to some, has totally violated its agreement with the United States. So much for being Mr. Nice Guy. All right. So when he came out with this tweet or post or whatever, when he came out with this thing, the market absolutely tumbled. All right. The market just absolutely took a nosedive. All right. I hope you guys can see this, but you guys can see it right here. This was like 708. And then 709 was that post, and then it just dropped, right? But it seems like the market did not care. It seems like the market digested the news fairly well. We also had, inflation data come out. So it looked like we didn't end as bad as we probably should or could have. So it was just a funny thing. It was just to see it and watch it happen in real time. That was just, again, this market right now is very volatile. It's moving to the beat of whatever President Trump is saying. Okay. Fundamentals, never heard of that. Never heard of those. All right. We're running on news and good news right now. Okay. Pure emotion, pure speculation. So this is why it's just really hard. Like, this market is just absolutely crazy right now. So let's take a look at what's actually going on. So Bessent, a day ago, he had a talk, and he was basically saying that, the U.S.-China talks are a bit stalled right now, right? And they need Trump and Xi to weigh in, and that was coming directly from him. So I'm just going to summarize this real quick, all right? U.S.-China trade talks are a bit stalled, requiring the two country leaders to speak directly. Treasury Secretary Scott Bessent was telling Fox News. All right, I believe we will be having more talks with them in the next few weeks, he said in an interview. But the two countries need to have, their leaders have a phone call at some point, right? And of course, President Trump has always touted that, he has a really good relationship with Xi. So we'll see what comes of it, because right now it seems that from China's perspective, the United States is being unfair, and we're still withholding, a lot of things. We're not letting their Huawei chips into our market. And likewise, we are not allowing semiconductors to go to them. So that's hammering their sector. So it's crazy, guys. It's absolutely wild what's going on between the two superpowers, right? Because again, China is a world superpower, whether we want to accept it or not, right? What happens in their economy affects our economy, right? They are a production type of economy. We are a consumption economy. We lean very heavily on each other. Again, this trade war scared and rattled the whole market, and we, saw greener days right after some talks had begun, and people were like, okay, we're finally coming to an end, right? But again, not so the case. It seems like there's still some lingering issues, so we'll see what's going to come from these. Again, it seems like the market digested the news really well, and again, we still, even though we ended in the red, I mean, we still overall, I think, are up for the week. I haven't checked, but I believe we are still up for the week. All right. So China calls out Trump for abuse of the semiconductor export control. All right. This happened yesterday, if I'm not mistaken. All right. So China's calling out the U.S. for discriminatory restrictions in use of its export controls in the chip industry, i.e. semiconductors. All right. NVIDIA, AMD, Broadcom, all right, to name a few, and Qualcomm, after the Trump administration accused the world's second largest economy of violating a preliminary trade deal between the two countries. Recently, China has repeatedly raised concerns with the U.S. regarding abusive export controls, especially for the semiconductor stuff. All right, and the latest escalation in the simmering trade war between U.S. and China, particularly as it pertains to artificial intelligence and the infrastructure needed to develop the most advanced technologies. Again, we are hammering the point home, especially for NVIDIA. Like, NVIDIA cannot ship their H20. They designed a whole chip just for the China market, and they're not allowed to send anything to China right now. They need some special export license. So if you guys were with me in my last stream, I said that, China or NVIDIA right now has, or they're trying to build some offices in China, and I don't think it's beyond them to just partner up with SMIC, which is a Chinese foundry for semiconductors, similar to like TSMC. I would not be surprised if they just partner with them and have them produce the chips. As a matter of fact, I'm not the only one that thinks that, because recently Jensen Huang got a letter from Senator Elizabeth Warren and a couple other, a couple other politicians, basically saying that, hey, you building an office there, we're worried about national security and so on and so forth, right? Because what would stop them from basically stealing chip designs and things of that nature? So, again, it's really heating up for chips. It's really heating up for semiconductors. NVIDIA is caught in all of this. All right, Jensen Huang is on record for saying that basically the Chinese economy, since they lost and they're losing a lot of their market share, this is forcing companies like Huawei to produce better and faster artificial intelligence chips, right? The Chinese economy used to really rely heavily on NVIDIA, but since NVIDIA and a lot of American companies can't ship there anymore, or send things over there anymore, this is forcing them, excuse me, this is forcing them to basically innovate faster. So they're losing market share. This is not good, especially not good for NVIDIA. And they spoke about this. They're going to be losing like a $5.5 billion quarter after quarter if they can't ship anything to China. So again, the idea or the thesis behind NVIDIA, making an office over there, I really think they're about to just start creating their own H20 version chips over there instead of having to worry about this export license, instead of having to worry about all this stuff. They won't get tariffed because their stuff is literally being built in China. So, again, we'll see what comes of this. It's just very, very exciting to see this happening in real time. And of course, us as investors, investing, like I have a pretty sizable position in NVIDIA. So I love to follow this news whenever something like this drops, because this stuff directly impacts the stock, right? This stuff directly impacts NVIDIA. All right. And me as a shareholder, I have to be aware of this. All right, so China once again urges the U.S. to immediately correct its erroneous actions, cease discriminatory restrictions against China, and jointly uphold the consensus reached at the high-level talks in Geneva. All right, China said the U.S. was abusing export controls after the U.S. banned American companies from importing or even using Huawei AI chips. The U.S. has limited exports of some chips and chip technology to China as part of a national defense strategy dating back to the first Trump administration. The restrictions have intensified, and this just happened, right? So there's these chip software makers, Synopsys. I didn't even know about this, but Synopsys and Cadence, they received letters from the BIS, the department, I forget what it's called, the Bureau of, I forget, it's the BIS. I forget what the letters stand for. Basically tell them to cease exporting their software over there, right? They're no longer allowed to. And this obviously ticked off China, right? Because they're like, hey, we need that stuff. I thought we had a good agreement. I thought we're lowering the tariffs. I thought, we're good for free trade. Not so much the case, because now the U.S. is accusing China, saying, hey, you guys never even dropped the barrier to your rare earth metals that we need for our own, national defense, national security, building weapons and so on and so forth, right? And again, this article just goes on to tell you that NVIDIA, again, was told that they can't ship H20 chips, even though that those were specifically designed for China, right? And that they needed a license, which they seem to don't have no way of getting. Again, this is all very, very political. But again, it's just crazy to see this happening in real time, especially as an investor, right? If you guys are interested in taking advantage of the semiconductor plays, right? If you don't know which semiconductor to go with, there's a couple different options over there. And I just want to put this out there in case you guys aren't even aware of it, because I wasn't when I first found this out. But there is a semiconductor specific ETF that just holds a basket of semiconductors, right? And that is the VanEck Semiconductor ETF SMH, okay? Shout out to, we have Alex in the community. He's the one who actually told me about this one. So shout out to him, Path to Retirement. He also recommended, the other version, SOX Q. If I'm not mistaken. Yeah. So there's the Invesco Semiconductor ETF. So if you want to play on this whole semiconductor thesis, and that this, in my opinion, is really going to be, the next Mag 7, right? It's going to be semiconductors. It's going to be semiconductors plus Palantir, in my opinion, right? So if you want to take that play, these are just two ETFs you can consider for your portfolio. Speaking of portfolios, I added Oracle to my watch list. Okay, so I'm adding Oracle to my watch list because this company seems to be involved in a lot of different AI projects that, aside from just Stargate, they're involved in a lot of data centers. They're involved in a lot of, deals with big partners like NVIDIA, like Palantir, like OpenAI, like Tesla, Microsoft. So I just added them to this. Again, if you're looking for other opportunities outside of the Mag 7, I think, Oracle, Archer, well, maybe not Archer. I don't know too much about Archer, to be honest, but definitely Oracle. Qtum is a ETF for quantum. So if you want to check that out, if you want to play on the quantum theme, it's something to look into. But you have AMD, right? You have ARM, TSM, Taiwan Semiconductor, ASML, lithography. They basically own that whole market. There's no one I know of that even comes close to what ASML is doing. SMCI, which is Supermicro, big partner with NVIDIA. NVIDIA, of course, right? Broadcom, definitely it should already be the Mag 10 at this point, right? Because Broadcom is right there. Broadcom is already, I think, close to being a $1 trillion company. They're not that far off, or they already achieved it, I think. Let's see. No, yeah, I can't see it here. But yeah, I think they're right there. And of course, Palantir, right? These are my picks for what I think would be alternatives to something, like the Mag 7. I'm not saying that the Mag 7 is dead or the Mag 7 is going away or that those companies are cooked. What I am saying is that if you were looking for probably better opportunities for a better return, I think, and don't take this as financial advice, but I think these would probably be some ideas to look at. All right. So let's look at our favorite boy, Tom Lee from Fundstrat. Okay, I always like to listen in. He's a perma bull. He's always kind of accused of being a perma bull, but I always like what he has to say. He did mention in a previous video, in a previous stream, that NVIDIA is that Bitcoin is reaching all-time highs. So that is an indicator that the S&P 500 should be close to follow. So we'll see what happens. All right, but let's listen in on what he has to say.
More than 10% between now and year end, and the latest ruling on tariffs gets us closer to a trade resolution. Joining us to explain is Tom Lee, the CIO and head of research at Fundstrat Global Advisors and a CNBC contributor. Tom, are you thinking through this in sense of kind of what path tariffs are ultimately going to take, or can you kind of look beyond that now at some point and just say it's just not going to amount to enough that it derails the market from rallying?
It's a little bit of both. I mean, I think in the near term, of course, the visibility on tariffs has gotten messier because now we have the judicial system weighing in on what can be done. And
so right here, he's mentioning that, the judicial, the federal courts basically blocked the whole tariff stuff. But, the Trump administration is trying to, appeal that. So for now, all the tariffs are back on the plate, right? Back in game. When this was announced, you guys saw that the market absolutely reacted like crazily. They spiked up like crazy. But then I think reality set in when, more and more news pundits were saying, well, this is just, a stalling. They're going to appeal. And not only that, Trump still has the power to implement tariffs, right? There's still a whole slew of tools that he has at his tool belt, which he can use. So, then the market kind of digested this and we ended kind of flat for the day as well.
And the response from the White House. But because I think the scope of what can be accomplished with tariffs has actually shrunk, it means when we think outside the next couple of months, I think that ultimately it's pushing us closer to a resolution, because now the bid ask between like what other countries might accept versus what the White House is trying to achieve is actually shrinking. And that gets.
So he's all, basically saying that over these next couple of months, with all the negotiating going on, something's going to give between the two countries, whoever's doing trade agreements with the United States, because now we know what they want and they know what we want. So that spread is starting to close in. So, I really think that probably in this next month, in June, definitely before July or hopefully early July, a slew of new trade agreements are going to start popping up. Because, July, the first week or second week, I think, is when technically the tariffs get turned back on for a lot of countries. So we'll see what happens. All right. But it's very interesting to see.
Gets us closer to the end game. So I think this is actually a net positive for stocks. And I can understand why markets are confused. But to me, I think the equity risk reward is still better today than it was in February 2025 when the S&P was at its old highs.
Right. So, I mean, in particular, do you look at the chip rally? Do you look at NVIDIA, which is, for what it's worth, kind of coming back down to earth after that big rally on the heels of its earnings last night. I mean, is that where you would look to kind of press into, or how do you think about what the rally might look like between now and year end?
Well, I think that when markets really believe the tariff sort of story and saga is behind us, I think it's going to be a very big cyclical rally. So I'd be expecting industrials and financials and tech, especially the washed out tech, which includes the Mag 7, to really lead. But I also think that would include small caps, because small caps have really been hammered by all this economic uncertainty. And so once that visibility returns, and then we think about 2026, and that's probably when the Fed is, more dovish than they are now. That's a tailwind for risk assets. So I actually think, weakness here should be bought, and I'd still be buying dips.
We got a combination. We know all of Wall Street's really.
Yeah, so just to summarize, he's still of the camp that he's going to be buying the dip, whenever these opportunities arise. And the path, like inflation numbers just came in, right? We're going to cover that later in the stream, but they were good, right? Inflation's looking good, guys. So we'll probably maybe get one cut this year. Who knows? But he's thinking like 2026 is probably going to be where, the Fed really turns dovish. They'll lower, and, we'll probably see better days, because now the new threat is over the horizon. Of course, there's a new threat over the horizon, and it has to do with real estate. Okay. There is a lot of trouble, a lot of stress happening in the real estate sector that's not being talked about a lot. So that's going to be the next thing that not only this administration is going to have to deal with, but investors are going to have to deal with. And, by extension, of course, the Federal Reserve will have to deal with.
Just reading Fundstrat, Tom. We get that. But they also sometimes publish their own stuff. So we got kind of a collection of a lot of comments this morning. Barclays said this, and I thought this was an interesting take, and then you can respond or not. It is not clear this is a catalyst for a sustained new risk on, given the complications it could pose for tariff revenues, the tax bill, and the bond market. And the point I think they're trying to make is the tariffs are supposed to bring in all this money that could influence how the tax bill ends up. And of course, that could influence the stock market. So if the tariff money goes away, even temporarily, does that impact overall DC tax policy and thus the equity market?
I'm really surprised he's asking this, because this is a very this is a good question, right? If tariff goes away, how's this going to influence the tax bill? And then by extension, how would this impact the stock market, right? Because that is interesting. If tariffs go away, right? Let's say they stop, which they were supposed to be used to help, with this whole deficit that the United States has, this whole overspending, it's supposed to help bring in revenue, all this other stuff. But this new big, beautiful tax bill is coming out, and it's, actually adding $3 trillion to, on top of what we're spending, $1 trillion to the defense sector, just so you guys know, i.e. Palantir is going to be a big beneficiary of all of this. How would this impact the stock market? And, Tom Lee is going to give us his input.
Well, I would chalk that up to another piece of a wall of worry. Over the last couple of weeks, as markets rallied, our macro clients have actually been really fighting this tape. They've been very skeptical of stocks rising, and we can see it in the prime brokerage data, where gross is actually high, but net is low, meaning hedge funds are shorting this rally. And we know there's still a lot of cash on the sidelines. So investors are looking for excuses for the market to fall. I'd say even that interpretation from Barclays is just another good example.
So in an earlier stream, I covered that, and this was Tom Lee that brought this up, that most hedge funds are investing overseas. They're shorting the U.S. stock market. They're investing in overseas, but they're holding a sizable amount of cash, right? So Tom Lee looked at this and said, this is a bullish sign. They're waiting for something to happen to give, and then they're just going to dump money into the U.S. market, right, into equity. So to continue.
Previously, we didn't want high tariffs. Now someone's arguing that if tariffs are lower, it's bad for the fiscal situation. I almost think someone's trying to say, heads I lose, tails I lose. But at the end of the day, if we get a tariff resolution, that's good for stocks. And I think companies survive this gauntlet of terror. That's why multiples should be higher next year.
What would be your kind of parting comment then, Tom, on the whole, the kind of events that we're going to have to climb to get through that, which include whatever further announcements may be coming from the White House on tariffs, which include however the bill kind of eventually gets passed in the House, which include the debt ceiling that we're likely to breach as all of this is happening. I mean, is it just noise?
I mean, it's not noise, Kelly, but I think if someone takes a look at everything that happened between February and now, so the last 3 months, we were told that we'd have a calamity because of Doge, and Doge, while it's been effective, has not derailed the economy.
So I love this about I love this whole statement right here. So, the question was basically is all the doom and gloom, news coming out just noise, right? And his response is just so good. It's not noise, but we keep thinking the worst case scenario, and that scares a bunch of people, scares investors, right? And I think it creates that peak pessimism, and that's when people should really start, in my opinion. And what I try to do is that's when I try to dive into stuff. That's when I start buying.
And we were told that a Fed pausing was going to be a calamity for markets because the Fed was worried about inflation. But as you know, the bond market hasn't necessarily had that big a spasm. And we were told that tariffs were going to send us into an economic Armageddon. And as you know, earnings have shown that things are fine. So I think at the end of the day, I'm just going to take the other side of all the arguments for calamity and say that I think American businesses are pretty resilient.
I mean, literally, general news show.
All right, that's it. Yeah, so, again, we still have one whole new quarter to go through to really see how the impacts of tariffs have actually affected any of the companies in the S&P 500 or even in the broader market, right? We still have this whole next quarter to really digest that. But again, I like Tom Lee's perspective on all of this, right? The companies are resilient. They're finding new ways to get around stuff, or they're finding new ways to innovate. And the tariffs have not been that detrimental to their business models. Yes, you have some CEOs that come on, CNBC, Fox News, et cetera, and they're touting the doom and gloom, of course, because, bad news sells, right? It's very sexy. But, on the other hand, stock market is reflecting that, and earnings are reflecting that, a lot of these major companies are not really all that impacted by these tariffs. So again, when we talk about psychology or, psychology of investing, sometimes you have to look at all the doom and gloom. Don't overreact. Don't sell your whole portfolio. Just look at it and just say, okay, that's a data point, right? I'll keep that in the back of my mind, right? Just because Goldman Sachs or JP Morgan Chase or Vanguard or Fidelity, just because they start, launching a bunch of forecasts for recession, 65, 70, 80% chance of recession, doesn't mean you just start dumping money into bonds, right? Instead, take a very cool-headed approach, right? Wait for things to come out or flush out or get more clear, right? So I like Tom Lee's just thinking and perspective on a lot of stuff, and his perspective vastly differs from that of Jamie Dimon, right? So again, it's always good to have these different perspectives: bear versus bulls, or doom and gloom versus bright and sunny, right? So hopefully you guys got some value from that. All right, moving on. This was just basically a summary of everything that Tom Lee was talking about, but we can skip this. All right, inflation slipped to 2.1% in April, lower than expected. Fed's preferred gauge show. Okay, just inflation doing really, really well. We're still on the decrease, right? We're still on the decline, and this is good news, but it's also a double-edged sword, because this is going to basically reflect for the Fed, hey, maybe we don't need 2 rate cuts this year, or maybe we don't even need a rate cut this year at all. So again, you got to take this as a data point. This could just keep interest rates a little more elevated for the remainder of the year. All right. So people who are, either on margin or mortgage rates or looking to buy real estate or invested into REITs, just know it's going to be a bumpy and rocky road. And, I keep saying, because I keep reading about investors, like real estate investors, they're just accepting this new norm, right? This is the new norm. We're usually addicted to cheap money, free money, low interest rates, but maybe this is no longer the case anymore. Maybe we just have to work around it. Maybe get better at real estating. I don't know, but this seems to just be the way the news is trending, or the way the winds are blowing, right? So just, I erased all my things, but yeah, basically I'll just cover this real fast. Let's see, spending slowed to 2%, so that's not good. So this is obviously going to affect retail. Looks like personal savings rate are jumped to 4.9%, so people are saving a lot more money, probably for that rainy day, that recession. Personal income surged to 8%, which is good, you know, for anyone who's working a W-2. Food prices fell 3%. Let's see, energy, goods, and services increased 5%, which isn't good. Let's see what else we got. I think that's pretty much it. But yeah, you know, again, the numbers came in very, very good. All right. So we got some news for Palantir. So any of the PLTW holders, PLTY holders, PLTR holders, anyone who's investing in Palantir, we got some good news. And this was an absolute crazy spike. All right. This was crazy. Let me pull up the community here and try to get you guys this chart, because I like to show this chart because it was absolutely insane. All right. Look at this thing. It spiked like crazy, right? It just spiked like crazy. It had a pullback and then it, you know, jumped back up. But this was absolutely crazy. I was watching this in real time and I was trying to figure out what was going on. But we can see here, like it had this really, really wild swing and then it kind of died down and then it just ended back up in the green, right? So this was a really good day for Palantir holders, right? It's almost becoming a meme stock at this point where it just constantly keeps changing hands and going up and going down, going up, going down. So let's see what happened. Palantir climbs as government contracts, new opportunities mount. All right. Palantir Technologies shares climbed 7.7% by the end of the market trading on Friday as a data analysis and artificial intelligence software firm continues to acquire government contracts to accompany its expanding commercial activity. All right. This is the key word right here, expanding commercial activity. Yes, they're acquiring government contracts, right, primarily from the United States, but this I think is going to be the big one. This is when they can make more money commercially versus governmental from, you know, government contracts. This is going to send Palantir absolutely rocketing, okay? Because again, they are kind of overvalued. They are kind of, you know, a lot of people are saying that, you know, by traditional metrics, like they're way overvalued, way overbought. Their, you know, PE ratios don't match up. Their valuation doesn't match up. And these are all good, valid points, right? This is pretty much the bear case for Palantir. But the bull case, at least in my eyes, is an increased adoption of Palantir by the commercial sector, especially the financial sector, right? They just partnered with TWG Global, and they're going to be basically getting their software into a lot of financial services firms, right? To detect, you know, fraud, you know, that kind of stuff. And this is a good thing for Palantir because, again, that financial services sector is a trillion, or what was it? I think a couple $1 trillion market cap or market sector. So it's really, really crazy. So anyways, last week, Palantir was awarded basically an $800 million US Army modification contract for their Maven Smart system. I did a whole video on this. All right. This is basically like it allows a commander to play, you know, a video game, right? That's really it. It's pretty crazy what this software can do. But not only that, this is really about $1 billion contract because they started this way back when. At first, it was between Google and Palantir, but Google, because of their, you know, moral ethics at the time, they chose not to do this software for the United States Army. So Palantir picked it up. And, you know, now it's really basically about $1 billion contract. So, again, Palantir is just on an absolute rip, okay? They also had a $170 billion project to deploy a global missile defense system dubbed the Golden Dome, okay? This is an initiative started by the U.S. president to basically have this, you know, missile defense system and missile tracking system placed over the United States and now by extension Canada, right? So this is going to be a very expensive system, and Palantir is one of the partners that's going to team up with Tesla and someone else. I forget what the other contractor is, but they're basically going to be able to identify threats and be able to take them out. You know, in theory, is what it's supposed to be, right? There's supposed to be these satellites that are going to have these missiles and lasers. Like it gets kind of wild. It gets kind of too sci-fi. But anyways, The New York Times today reported that the Denver-based Palantir might be the company tapped to handle Trump's executive order. This is new, all right, that called for the federal government to merge information and data across its agencies, which would be a total welcome sign, to be honest. All right, Palantir is working with Tesla CEO Elon Musk's Department of Government Efficiency. Palantir reps are also talking to the Social Security Administration and the IRS for potential deals, according to the report. This is absolutely crazy, right? This is just Palantir, again, getting more into the weeds of things. This is basically the Skynet of the United States, all right? This is the Terminator, future right here, the dystopian future where Palantir is going to be loaded into Optimus robots, and Optimus robots are going to go around, looking for humans, all right? This is just absolutely crazy. I'm joking, of course. All right, in addition to the mounting public sector contracts and opportunities, its commercial segment is exhibiting exorbitant revenue growth. In its first quarter financial results released earlier this month, Palantir basically smashed it. Year over commercial revenue growth of 70%. All right, that is crazy. 70% year over year. Total revenue spiked nearly 40% year over year. Again, Palantir is just absolutely killing it. Palantir entered into a new strategic partnership with the Joint Commission earlier this month to revolutionize how healthcare organization and accreditation data are gathered and utilized. The nonprofit Joint Commission accredits and certifies more than 2,300 healthcare organizations and programs in the United States. Again, another use case for Palantir besides just, looking for bad guys. This, again, the software is absolutely amazing. I've never used it, but I've talked to people, especially on the defense side, who've actually used the software, and they say it's really, really freaking cool. What used to take a room of like 10, 15, 20 people, they can now do it with 2 or 3. They don't need this huge workforce of people to do a lot of the data analytics or a lot of the digging into information, right? They partnered recently with Fannie Mae to detect fraud. And what used to take humans 2 months to look through and trudge through and go through all the documentation, Palantir did in 2 hours. So again, another use case. Financial services firm, Fannie Mae, Freddie Mac, they're notorious for basically causing the 2008-2009 great financial crisis, okay? So they've been under government conservatorship for a very long time, all right? Oh man, I see we got some legends in the channel. Let me just say hello. Sauce Maker, part of the old guard. Welcome back, sir. Always a pleasure to have you. We have Check It Out. Let's see. Gap Clothing said they paid $300 million in tariffs last quarter. All right, we have Charles Fitchard, number B1. Not sure what that is, but hey, welcome to the channel. Michael Anthony, looks like ALLR has hit support levels, rebound with price target of $8 with a low float with a stock buyback. No idea what any of that means because I don't follow ALLR, but I will take your word for it, sir. All right, Sauce Maker says that no one knows the true government spending on Palantir. I hope it's a lot because Palantir is one of my biggest positions, and you already know that, sir. All right, we also have another comment. A Path to Retirement says SMH for options, juicy free money. Juicy free money, okay? Path to Retirement also corrected me and said that Broadcom already has reached a $1 trillion market cap, all right? Same as Taiwan Semiconductor. So again, if you're looking for opportunities outside of the Mag 7, TSM, Broadcom, right? My whole thesis for semiconductors, I have a whole video on this, right? I ended up buying Chippy from YieldMax, so it explains that whole thesis kind of in detail, right? I think anyone who's excited about something like that, income plus, exposure to the sector of semiconductors can absolutely get some value from there. We have, oh man, we got a bigger channel in the channel. Retire on Dividends. Welcome back, Rod. What's the latest and greatest? Man, we covered so much news already. We covered JP Morgan. We covered US-China, fighting it and beefing it out. We talked about a little bit about Fundstrat's Tom Lee, bullish as always. And we covered inflation. Inflation is looking good. All right. We have Retire on Dividends saying, I need to learn more about Palantir. Feel like you're missing out. Bro, you are absolutely missing out. All right. I think we're still in the very beginning stages of this whole AI thing. Again, I always talk about Palantir. I love Palantir, but yeah, I think we're still in the beginning stages of this whole AI, thesis, whatever you want to call it, right? For the next 4 to 10 years. Palantir is going to be in everything. And people thought like, oh, it's just going to be in the US government contractor. No, when they won that NATO contract, that was the beginning. That was the beginning. That was a $100 million contract, if I remember. All right. And not only that, they started partnering with Societe Generale, a huge bank in France or France. All All right. And they're also basically spreading their software in other different industries and sectors, healthcare, financial services, right? So it won't be long before Palantir starts securing, commercial contracts with the UK, the rest of Europe, France, Italy, Germany. Then you have major financial hubs in Singapore. You have another major financial hub in Australia, and then Japan, South Korea, and then it won't be long before they're in China. So I really think Palantir just has such bright skies ahead of them. Palantir, NVIDIA, I mean, that's a match made in heaven for this whole AI thesis, in my opinion, of course. All right. So we got through the whole stuff with that. All right, let's move it on. Let's see. JVMZ says, damn, late again. What's up, everyone? Well, hello, sir. Welcome back. All right. Maybe I need to start these streams a little later. So moving on to TSMC, speaking of TSMC, Taiwan Semiconductor, they're considering constructing an advanced fab, basically facility in the United Arab Emirates. This is absolutely interesting. Okay. So, President Donald Trump just went on this huge, tour in the Middle East, drumming up basically drumming up investment for the United States, but also spreading, the Stargate project. And I've covered the Stargate project plenty of times. It's part of my whole AI thesis. But the Stargate project, the net of it is that, you have a huge partnership between SoftBank from Japan, who else? Oracle. You have OpenAI, Microsoft as the hyperscaler, CoreWeave is involved, and NVIDIA, right? All these partners, and MGX, which is a Saudi Arabian-backed, I think it's like an investment firm. But you have all these companies all together for basically building artificial intelligence infrastructure in the United States, right? So now the UAE, or I think it's Saudi Arabia, they're building, a Stargate, their Stargate project out there. So it's interesting. It's absolutely interesting. All right. Taiwan Semiconductor manufacturer is considering building an advanced chip fabrication facility in the United Arab Emirates, according to Bloomberg. The company has discussed the possibility with officials in U.S. President Donald Trump's administration, as it would require approval from Washington, D.C. Again, ASML, TSMC, they move to the beat of the U.S., period, right? ASML, they would have no customers, in my opinion, really, if the U.S. cut them off. Even though they're a Netherlands company, they might as well be considered a U.S., highly influenced company. I mean, they own the lithography market. Shout out to Citizen of the Year. He has a great video on ASML. I really recommend people check him out. All right. But yeah, the whole lithography market is owned by them, and they move to the beat of whatever the United States says. And so does TSM, right? Because you have NVIDIA, Broadcom, and AMD, right? They manufacture a lot of their chips. So if they were to lose all three of those customers, TSM would probably not be as big or important as they are today, right? So the company has discussed a possibility with officials of the U.S. President Donald Trump administration, as it would require approval from Washington, D.C. to build the facility. The report said, citing people familiar with the issue, the proposed project would be similar to the facility TSMC is currently building in Arizona. Even if approved, it would take several years before breaking ground. I honestly don't think so. In true honesty, I think if they really want to build it in the UAE would fast track those approvals. I don't know if you guys have ever bought real estate in Abu Dhabi or Dubai, but it is stupid easy. Like I was literally using WhatsApp to sign documents, right, on my phone and sending it to them over WhatsApp, and they took that. A top of head item for a lot of the Arabian Peninsula, for a lot of the Middle Eastern countries. So they would fast track this 100%. I would not be surprised if they could, if it's approved by Washington, D.C., which I think will be really quick, in all honesty, because again, they're really friendly towards the UAE. UAE is friendly to the United States. The only thing that's going to hamper this arrangement, I think, is UAE does kind of have a reputation of having a bunch of shell companies, like Chinese shell companies, that were buying up chips from the United States and then sending those chips off to China. So a little bit of a bad rep. They would have to find some way of controlling that or preventing that from happening. But I could see TSMC probably getting away with it and probably building it sooner if Washington, D.C. is going to approve it, right? TSMC makes chips for the biggest hardware companies in the world: NVIDIA, Apple, AMD, and Broadcom. The UAE has been busy securing partnerships with tech companies to increase its role in AI. They unveiled the first phase of the 5 gigawatt AI campus in Abu Dhabi. That campus will be built by UAE-based firm G42, which has a big partnership with OpenAI, and Oracle and Microsoft and NVIDIA, right? So it's crazy. It's absolutely crazy what's going on over there. All right, so we are pretty much at minute 50. This was a long news cycle, guys. I'm going to breeze through the rest of it, all right? The market updates. We'll check out the portfolios real fast and then end the stream, all right? Because I know you guys want to get out and start relaxing on this Friday. So to end the poll, what are you doing this weekend, all right? Nothing financial related, I hope. All right, 47% of you said unplugging and relaxing. 17% of you said beers and games. All right. 37% of you said no idea, but I'll figure it out. I'm going to go with the 17%, probably beers and games. I might have a few, brews and play some games and disconnect kind of from the finance stuff. Of course, it's always at the top of head for me because, again, this is what I like to do. This is my passion. This is what I like to follow. And of course, I'm investing. So this stuff is always at the top of mind for me. But Retired Dividend says baseball wasn't on the poll. I will include some sports in the next poll, sir. All right, so we'll end that here, and thank you guys for participating. All right, let's go through the market updates. S&P 500, we are up. I don't even know what to call this. Almost down. I have no idea. Something. It's not even 1 basis point, right? So, anyways, we're up or we're down this much. Okay, guys. For the NASDAQ 100 tech focused, all right, we are down 11 basis points, but over the last 5 days, we are still in the green. We are still in the green, all right, up 2.5%. For the S&P 500, we are up 2.25%, or almost 2.25%. So we did really, really well this month, despite we did really well this whole week, despite what's going on. For the month, right, ending the month, we are up 6.15%. This was really, really cool. All right. For the NASDAQ 100 for the month, we are up 9%. All right. We also have, I'm going to put gold over here. For gold, we ended, let's see. We ended in the red. Seems there's some outflows happening, maybe a correction, maybe a pullback. No idea. It seems that people are probably putting more money into equities, as obviously evidenced by the S&P 500 and the NASDAQ. All right. So we have gold that's having a bit of a pullback, but they are still one of the best performing assets year to date, 24%. All right. But for the month, they are ending in the red. All right. For Bitcoin, all right, everyone's favorite, 5 days, looks like it's been trending downwards. It did reach an all-time highs recently. All right. So hopefully they can get back up. For the month, they are up 9.6%. Year to date, they are trailing gold. All right. Up 11.47%. So second best performing asset year to date. 10-year Treasury, we use this as just a weather gauge for small business lending, mortgage rates, that kind of deal. We are actually trending down, which is really, really nice. All right, so Treasuries looks like they're getting a little bit of a breather. This obviously impacts the REIT market. So if we look over the last 5 days, we are up 2.86%. We use the Vanguard Real Estate Index VNQ as our weather gauge. So it looks like we're doing good for the month. Basically up 1%. You know what? I'll take that. I will take that 100%. I hate ending in the red with REITs. All right. So let's hop over to the portfolios and then we'll call it a day. All right. So for the portfolios, for the high yield investing people out there, for the high yield junkies like myself, we are doing okay. All right. I have no new buys. Actually, I take that back. The only thing I bought this week was 5 new shares of Chippy. I'm holding anything I got. Looks like I got some dividend income. So, I am using a ton of margin, like I always say. All right. I try to keep it mostly in my core positions or my anchor positions. All right. XDTE, XPay. I have a margin buffer of $43,000. I'm always trying to opt for lower margin maintenance picks versus higher margin maintenance picks. All right. So the margin maintenance ratio, if we look, we'll take NVW. This one, I believe, is at 30%. Yes, this one's at 30%, but it doesn't mean all weekly pays. All right. Volatility does play a point in all of this. If there's a lot of volatility behind the stock going up and down, left and right, you'll have what happens to PLTW. PLTW actually had a 10% increase in maintenance ratio. All right. So you guys got to keep that in mind. You always have to be checking the single stock exposed ETFs. All right. For the index, it's harder for an index to drop 5 or 10% than it is for a stock. Okay. These ones typically stay at the 25% level. I have not seen this even through the most brutal times and volatile times of Liberation Day. I did not see this ever spike above 25%. All right. So again, this is always a good thing. But again, you also have to keep top of the mind that Robinhood or any broker for that matter can change these requirements whenever they see fit. So always keep that at top of mind. All right. So to end this stream off, we also have the M1 Finance portfolio, which I'm logging into right now. And let's get that here. All right, so this is the M1 Finance portfolio. This is where I keep a bulk of the REITs. All right, well, actually all the REITs. So all of my REITs are here. Again, they look like they're recovering just well. All right, but I would not be surprised if next week they probably end back up in the red. For technology, VGT recovered very well this month. I think we had a really good, just a really good bump. The NASDAQ was up 9.6%. So this is probably up, a little more than that, maybe like 10.25 or maybe 10.3%. So again, we are recovering. We're almost there. BDCs, not doing a whole lot. Crypto ETF, I'm in iShares Bitcoin Trust. Nothing new there. Okay. So other than that, guys, I think that is pretty much it. I'm just going to check on the chat and then we will conclude. All right. So check it out. It says thoughts on Cornerstone funds to be used as an anchor. So I know what's his name. There's a YouTuber. It's like Wealth. Man, I know who I know who recommends those ones. It's like, Wealth, man, I forget his name. It's gonna kill me now. Let's see. Hold on a second. Let me do this because I know exactly who he's at. I don't know Cornerstone at all. Like I've never used Cornerstone. But there is a YouTuber that does use them specifically, and he uses a lot of their stuff, and he announces unconventional wealth ideas. I'll put that in the chat. I have no problem shouting him out because he actually does put out a lot of good content. But not only that, his name, I guess, is Mr. Todd Akin. So I don't know if you're watching this, Todd, but shout out to you, sir. But he does actually put out some really good stuff. I never purchased his e-guide or whatever, or I'm not a member of his Discord or anything like that. But he did put out a lot of like videos on margin usage. Actually, I draw a lot, or I won't say a lot, but I draw some of the inspiration of my margin strategy from what he basically talked about a year ago, and he constantly talked about for a year, 3 months, 6 months, and he's never really changed his idea about how to use margin, how to use it with an anchor. He's a big fan of Cornerstone, so again, shout out to him. He does really good content. Holy crap, look, it's a wealthy life is in the chat. So Dan, hey, welcome, man. I think you're pretty much at the end of the stream, unfortunately. But yeah, I saw that crazy, actually, we just covered that. I saw that crazy rip and then that crazy drop right after. And I was like, I can't do this, man. They're playing too much with my emotions. So I ended up just freaking closing out for the day and ended up going to bed. I was like, man, Palantir is probably going to go like even further down. But it ended in the greens, up 7%. That's crazy. That is crazy. It is a meme stock at this point. It is an absolute meme stock. So addressed everything in the chat. So I think that'll probably do it. You guys need to go out, have some fun. All right. Go touch grass or whatever else. All right. Get off the phones, get off the computers. You guys enjoy the rest of your weekend. Enjoy whatever you have coming to you. Those of you who are going to have beers and play games, those of you who are going to sit with family and chill, maybe go, I don't know, go do something else. For me, again, I'm going to probably have a couple of drinks and chill out, right? Try to get out of finance land. But I appreciate every one of you for joining the stream. I appreciate you guys for chopping it up with me in the chat. Of course, this channel would not be here if it's not for the support of people like you. So again, I really do appreciate it. With that being said, you guys have a great rest of your evening, a great rest of your weekend, and I will see you fresh, bright and early on Monday morning when the stock market opens. All right, you guys take care. Have a great one.